We are talking today about mortgages. We're talking about Bernstein, specifically about Fairway Mortgage. We're talking about what makes him better or different than other lenders. Tell me what it is that's the difference between other mortgage companies and what makes Fairway so special.
Getting back to the point, the tag teaming, I try to make it as easy and informative, and I try to make the listing agent as comfortable as possible. And sometimes that's not sugarcoating it. A good listing agent's been around. I would say 75% of all loans are originated by non-bank lenders. When there's purchasing power coming into bonds, when buying comes into bonds, it pushes up the prices of bonds. So the bonds are going up, interest rates are coming down. It's the direct correlation. That's the direct impact on interest rates. So if the president says, hey, we're going to start buying bonds, all that buying pressure is going to lift the prices of bonds, which will lower the yield. Bond prices go up, interest rates go down.
Hi, and welcome to Making Money with Laura Sanders, and I am Laura Sanders. Every week, we talk about something to help you make a little money, save a little money, or maybe just help you navigate this crazy world that we live in. Because when I tell you that this world is crazy, y'all know I'm not lying, because some of the things that happen, I am definitely not Steven Spielberg, and I could not make this stuff up if I tried. So today with me, I have Cliff Bernstein. He is with Fairway Mortgage. I wanted to say, he's with the mortgage company, Fairway Mortgage, which happens to be one of the top mortgage companies in the United States, correct?
Fairway is we're the largest company that no one's really heard about. Reality is we're a top 10 lender in terms of purchase volume in the country. So let's talk about that for a second. You've been doing mortgages for how long? Since 1995.
Okay, so he's old. So he knows what he's doing.
I was the youngest guy in New York City to be licensed.
Where'd you start
5 years old.
Where'd you start at?
I started, it's a long story.
Okay, tell us the quick of it.
Okay, so
we only have like 27 minutes.
The abridged version, I started my career on Wall Street, and we could get into that.
Oh, do you know The Wolf?
The Wolf of Wall Street? No, The Wolf of Wall Street. But started my career on Wall Street, and it's something I wasn't
happy.
Remember the show Married with Children?
Yeah.
Maybe I'm dating myself. Love and Marriage.
Yeah.
That would come on Sunday night, and I used to get pits in my stomach because the greed on Wall Street. I just didn't want to go to work on Monday. So a friend of mine who was an attorney was opening up in a mortgage company in Clifton, New Jersey. And here I am living in Manhattan doing the reverse commute back and forth. This is 1995. I had my first child on the way, and I went to go check it out to see what he was doing. And I was just observing and making suggestions. He's like, you know what, you'd probably be really good at this. And then, couple of years later, I moved down to Florida. I started my own mortgage company, American Home Lenders, and in my partner's house, we moved to Plantation. Recently, back in 2010, after the great financial crisis, I moved on, and, I'm now with Fairway and, my mortgage, but I had my own mortgage company for about 12 years that we built up.
Okay.
Yeah.
So out of all the mortgage companies, because there's a lot of great mortgage companies, right?
Yes.
Tell me what it is that's the difference between other mortgage companies and what makes Fairway so special.
First of all, what makes Fairway special, I would say it's the culture, it's the people, it's the loan officers. We're treated the way a loan officer, we're given all the support, and they're very supportive. They cheer out victories. They're in the trenches with us, and it's truly a team effort at Fairway.
Okay.
And we do common sense underwriting.
Okay. And do you have a team at Fairway for you? Not like the team that works behind you when you bring in a loan, but do you have other lenders that are underneath you? So
in terms of my team, it's myself, it's my loan officer assistant, and my processor.
Okay.
And of course I have my underwriting.
Okay.
But it's my decision. I just don't want to be there to manage other loan officers. I want to be there because that's a full-time job.
Right.
That's truly a full-time job. And I need to be there for my clients 24/7. I can't be there for other loan officers and as much as I love to educate and my door is always open and you can always call me and I'm always happy to help, I just don't want that to be part of my job description on a day-to-day basis. So I choose not to have loan officers under me.
So you mentioned 24/7. So tell me of a time where, I don't know, that you had to do some kind of crazy time for a job for somebody.
We all remember during, the crazy times during COVID.
Oh my gosh, yes.
Back in 2020.
We were working every day, every hour. It didn't matter. House comes on the market at 8 a.m. At 8:05, you better be on your way.
It's amazing. And my phone's always on. I never shut it off, especially when you have children. You never want,
right, which they're not even children anymore.
Right, they're grown adults, but they're not at home, so you're not
Yeah.
shutting your phone off anyway. And I just never would. It's always with me. It's by my side, even while I'm sleeping. Got a call once at, I think it was 2:45 in the morning.
And they weren't drunk.
I'm like, this is either the FBI or something, something bad.
Yeah.
So
you answered.
2:45, and that's a joke about the FBI. So of course I answered the phone. Didn't answer it on the first ring, but I did get it on the second ring. So I answered the phone. It was my client. He's like, "Oh, Cliff, I wasn't expecting you to pick up the phone. I was going to leave a message so you got it first thing in the morning, but we need a pre-approval letter because we were up all night and we decided this is the house that we want, and we want to be first in line."
You did not get out of bed and go write the
I actually got out. At that point, I got out of bed.
Did your wife wake up and say something?
She's used to it. And that phone, I could keep it on mute, but no matter what you do with the phone, because you're leaving it on a lip to hear something, it's always beeping, you're getting messages, you're getting emails. So it's like a disco going on, as a loan officer while you're sleeping. So she's used to it. But no, I did get up. I wanted to review the file because I wanted them to have the letter. Back then, if you didn't get the letter in by 6 a.m, you were late.
Yeah.
And they didn't get the property, believe it or not.
Even though you woke up.
They didn't get the property. And this went on, many different
So let's
times.
talk about that. Tag teaming.
Okay.
Do you know what that means?
The tag team?
This is not a sexual thing. This is like a tag teaming in real estate.
Okay.
I call tag teaming is where the lender calls the listing agent to tell them how great the buyer is.
Yes.
Without them having to call you. Because I'm always chasing lenders around because I want to make sure that the lender's done their due diligence, that they've made sure that the insurance, because give you an example, you get some of these out-of-state lenders, right? And you call them up and you say, what are you using for insurance? And they'll tell you, oh, I'm using $125 a month. And I'm like, for what? There's no property that you could do for $125 a month.
Right. Well, it's actually it's almost laughable sometimes or comical because they always ask for a DU approval.
You can make that up.
But yeah, it's as great. It's as what
Good
you put in, what you put in.
No.
But most of them don't even review them. Like they'll send it. My buyer agents will say, "Hey, could you send me this? Could you take a look at this DU? It looks great." So I'm looking at the DU, and I noticed the debt-to-income ratio is around 48%.
Right.
So a little extended, but fine. Fine to get the DU approval. It's not going to go. You're not going to get it on conventional over 50 or over 49.9, but at 48, that's fine. Great credit. So everything was looking pretty good. Albeit an extended debt ratio. But then you look down at the housing payment. And this was a single-family home in Carl Springs, priced at around $725,000. And I noticed for insurance, they had $115. The house was 25 years old, $115. I'm like, this will never fly. Insurance is going to be
right. So that's when you have to say, can you up the insurance to $500 a month?
And when you do
and
that,
then now their debt's going to go to 59.
Now that DU approval is
not going to be
approved ineligible due to DTI.
Because you need to know what you're looking at.
Exactly.
And I tell this to people. It's like I actually have had a lot of people lately have called me to come out in my farm to get information from me, and then hire agents that aren't around the area. They're calling me to get the information to figure out, oh, what will my house appraise for? What do you think? Is there anything that we should do before we put it on the market? And then they hire an agent that's not even familiar with the area
they're just using you for the information, and
Right.
they're probably trying to save money.
And what's
on,
funny is like nobody knows the area better than me. And if I don't have to answer the phone when an appraiser calls me to ask about my properties that I've listed.
you know more than they do.
No.
Well,
But appraisers will call to confirm a sale, right?
Right,
And ask what was the condition like, because pictures are only so much, right?
yes.
Like, and that's the thing. Like, I can make it or break it.
Yeah, and I don't think anyone knows. Nobody would know more than you do about that area. That's
Right. That's my area.
That's
so
your area.
I laugh that
Yeah.
people do that, you know?
Yeah.
So,
But getting back to the point, the tag teaming, I try to make it as easy and informative, and I try to make the listing agent as comfortable as possible. And sometimes that's not sugarcoating it. That's not because a good listing agent's been around.
right.
They know when we're, BSing them. Oh, the best. Sometimes not everyone's the best.
Right.
But just, I feel that honest approach, maybe talk to them about possible pitfalls that really aren't pitfalls, that why you will overcome that, why this is a great borrower, why they want the home, why they should have the home, and exactly what you're going to do in the process. I will have the appraisal ordered on this date. I will have an approval on this date. My phone's always open. But whatever it is, I'm there to make their decision easy.
Right. And that's appreciated as a listing agent.
And I feel communication is the key.
Yeah.
Just keep them informed and be honest.
Right.
Yeah.
Well, I think we should go to commercial break. And when we come back, I think we should talk about what is going on in the market. Are rates up? Are rates down?
Mm-hmm.
Where are rates? So stay tuned, and we will be right back to talk about rates.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Priority One Credit Union of Florida is a welcoming credit union that makes your financial success our number one priority. We offer lower loan rates, higher deposit rates, and common sense local loan approvals, with nationwide access through shared branching.
Hi, I'm Dina Hennessy, President and CEO at Priority One Credit Union. We are open to the community. Anyone can be a member of our credit union, and we would love to have you.
Contact us today at 954-335-5100. You can also reach us at PriorityOneFL.org. Your financial success is our priority. That's 954-335-5100.
Hi, everyone. Welcome back to Making Money with Laura Sanders. And I am Laura Sanders. And we are talking today about mortgages. We're talking about Cliff Bernstein, specifically about Fairway Mortgage. We're talking about what makes him better or different than other lenders. And sometimes people, don't realize that having that personal ability, like right now I have a customer that's doing a loan with a bank. It's not fun. They don't return your calls. You don't have their cell phone. If they don't work on the weekends, and understanding the difference between a direct lender and a bank is important too. People don't know. And of course, my client got a little, he's like, Laura, not everybody, most everybody uses banks. I'm like, actually they don't. Do you even know the statistics on that?
70.
We make these up. No, I'm just
well,
kidding.
we're making them up.
No,
This is not an exact number, but I would say 75% of all loans are originated by non-bank lenders.
Which means it wouldn't be your standard Bank of America,
We're not a
TD Bank.
We're not a
Right.
depository. We're not
Okay.
doing checking. We're not
Right.
doing savings. We're not taking assets.
Now, speaking of TD Bank, do you do the foreign nationals that they do?
So TD Bank has obviously a large retail, and they're a Canadian-based institution. So, and we do foreign national loans, and we do it quite well. When I have clients come to me or refer to me, I always say, have you checked RBC, Royal Bank of Canada? Have you checked? Yeah,
That's nice of you.
Yeah, have you done your due diligence? Because I want them to be educated, and it's really true. An educated borrower is my best borrower.
Now, how many years you been married?
I've been married. It'll be 30 years.
Right. So she's used to it by now.
This was a 15-year loan, but we extended it. Yeah. So no, she's used.
No, at 15 years, she was like, I'm done with this. I don't want to do this anymore. And you're like, listen, it's either take it or leave it. And she's like,
But I'm wondering if the same thing happens on a marriage as it does on a loan. 30 years, what happens? Do we refi? What do we do here?
I think we refi.
Yeah, we'll refi.
Yeah.
She's a good one. We'll refi.
Yeah, I got 10 more years to 9 more years to refi.
21 years for you?
Yeah, he'll be
Great.
21, yeah.
Wonderful.
Yeah.
Wonderful.
So let's talk about rates.
Okay.
We have a couple of minutes. We can talk about rates. So it's funny. Before we started the show, I said to you, how are rates doing? And you said they're coming down. And it's like, no, I think what they're doing is they're doing this.
They're
not really, and I know, and I'm on the radio and I'm showing you with my hands.
Yes.
They're bouncing. Like they're not bouncing anywhere. Like they're just waving. Like they're not. It's the same.
We're bouncing within a range. We are basically in a very, very tight range when it's coming to mortgage rates. If you look at the chart on a 30-year, on the benchmark 30-year fixed rate mortgage, the chart will look like 5.99, which was the lowest in the last 3 years that we just hit about 2.5 to 3 weeks ago. Everybody was posted 5.99. We have a 5 handle. Great.
It's been like that.
6 hours later, we shot up. So we've been between on the low end of the range, here with my hands, 5.99. The high 6.375, and we've been bouncing off the lows and the highs on that range, and that's it. Which tells me we're going to break out. We're forming basically it's called forming a pennant, and we're going to break out. We're either going to shoot up to the upside or we're going to shoot below.
So I keep hearing that rates are not going to go down. I don't even know how this is all determined, other than the fact that I think we talked about before that the president was going to be buying mortgage-backed securities.
Correct.
Did that happen?
It was mentioned, and the bond market reacted based on that news. It hasn't happened yet.
How did it react?
The market reacted very favorably. People rushed in and they bought the bonds. And as we talked about prior, when there's purchasing power coming into bonds, when buying comes into bonds, it pushes up the prices of bonds. So the bonds are going up, interest rates are coming down. It's the direct correlation. It's what impacts interest rates. That's the direct impact on interest rates. So if the president says, hey, we're going to start buying bonds, all that buying pressure is going to lift the prices of bonds, which will lower the yield. Bond prices go up, interest rates go down.
So all these bonds were bought.
Yes.
And that's what made it go to 5.99.
Well, no, it was just a suggestion of that they're going. So, it's basically people rush in and they buy the bonds because they want to buy.
And what interest rate are they getting on the bonds?
Well, for example, bonds trade every single day. So if you have let's say you have a bond price at $100, the price of the bond's $100, and every bond pays a coupon, right? Mm-hmm. It's paying you a 6% dividend at $100. That's a 6% yield. So the bond's yielding 6%. All of a sudden, the president says, hey, we're going to start buying those bonds. So a lot of the investors come in after they hear that. They're like, oh, let's buy the bonds before the before the Treasury starts buying them. So if all that buying pressure comes in, all that buying power comes into the bonds, and they're buying bonds at 100, they're gonna buy up they're gonna take the prices up, because that $100 bond from all the buying is now $120. So you see how it works?
And then it makes sense for them afterwards to sell the bonds.
But they have
to hold them for like 4 years, right?
Well, no, you don't have to. Bonds trade every day. But you understand, when people are buying bonds, bond prices go up. So that $100 bond that was paying $6 with yielding 6%, it's still paying that same $6. Except now to get that $6, you have to pay $120 because the price went up. Mm-hmm. So what happened to your yield? Did the yield go up or down?
No, it went down.
The yield went down. So now that $100 bond, $120 mortgage-backed security bond is now yielding 5.75. See what happens? Prices on bonds bond prices go up because of the buying.
Right. So
yields
if
come
you
down.
already own your house, realistically, you want interest rates to go up.
If you own your house, well,
You want interest rates on home buying to go up because you have investments in the bank and you want your investments in the bank to make higher yields.
well, it's the old adage: what's good for Wall Street might not be good for Main Street, vice versa.
Right.
Money. There's only a certain
Unless
amount.
you don't have any money in
There's only a certain amount of money out there. So
Yeah.
traditionally, if there's money going into bonds, where's it coming from? It's got to come from somewhere. It's coming from stocks. They're selling stocks to put money in bonds. So when bond prices go up, in theory, stock prices should be coming down because money, it's called a flight to safety or whatever they're doing. They're taking money out of stocks, selling stocks. So what's going to happen to a price of a stock? It's going to go down if people
Right.
sell, buy bond. So you don't really, as a homeowner, you want rates to really come down because the biggest impact on home prices are interest rates.
Right.
So if interest rates come down, demand for buying goes up and the price of your house is going to go up. So you're a
Right.
homeowner, you just want price. And that's the dilemma the president is having right now. He wants to make it more affordable, but he doesn't want to do it at the risk of home values. He doesn't want to bring
Because
down
it
home
isn't
values.
really affordable.
You know what? But prices, they're talking about tariffs. Oh, the price of steel has gone up. You know what? It's not, the price of steel is not really impacting housing. Yes, the cost is more, but all these builders, they're giving incentives, this and that. The real cost of housing is not only because prices always go up. They always go up. It's the higher interest rates, it's the insurance, it's the taxes, all that
Yeah.
combined. So
Do you think they're going to get rid of the taxes?
that we talk about this, and that's a very interesting.
It would only be for your primary. It wouldn't be for
It will only be
investment.
for primary. But
And
what
then
do
when
you
they
think?
raise your investment,
But what do you think about that? Could that really happen? I mean, we're gonna be voting.
I read
on
a whole article of DeSantis talking
Right.
about this, and yet laughing, saying we don't need that money.
Well, he talks about how he doesn't. We don't need that money from the primary homes that gets allocated. The tax collection, but we're going to need a 60% of the vote. 60%.
I believe you'll get it.
I mean, and there might be other proposals tied to it that might make it difficult or confusing.
Oh, okay.
I don't know how it's going to look, but
When's that coming out on the ballot?
It would be on the November ballots of 2026 this year.
Oh.
Right. So, I mean, I'm voting.
What are you voting? Or are you
I'll-
not going to say?
I'll be voting no property taxes.
See, and I want to know,
But
like, I have
what's the
rentals.
impact?
Like, will that be an impact on my rentals to make that even increase more?
Well, your
To
values will
take-
go up. All housing value, even if it's an investment property for you, it's just going to be good for housing overall.
We still need to stop somewhere where it ends up affordable. Like,
But prices are always going higher. We talked about it before. In the last 75 years, home prices have only been down 4 times.
yeah.
Last time
And I've
was
been alive for
2008.
all 4.
Yeah.
Like,
Dude,
that's
how-
weird.
Prices don't come down.
Yeah.
They don't.
So if somebody wants an excellent mortgage lender, how do they get a hold of you? At 3 o'clock in the morning?
3, if we
In fact, I dare you to call them at 3
I
o'clock
dare
in the
you.
morning.
I dare you to call me at 2:30, 3 o'clock in the morning. No, I welcome it. I welcome it. I
Only
promise
if you're really buying. Don't do it
I will.
just to be.
I will answer in the second ring. That's at 561-213-6852.
And if you're looking for a top-rated realtor, you definitely want to give me a call. And I have to tell you, like, real quick little side, I kind of put it on Facebook today. I was talking to an appraiser yesterday, and she was telling me how somebody called and said that their taxes were too high, and they were like all upset about it. And she's like, well, you can't fight it now. You got to wait till September. Long story short, their realtor never told them that, hey, this person owned this house for 20 years. Of course your taxes are going to go up in a year and a half from now. And the question is, whose responsibility is it to tell them? It's in the contract. I tell them. You tell them?
Unless you don't want to have that call 4 months down the road, of course, you have to
Yeah.
educate them.
So
it's a difference. I know we're in
Yeah.
a rush here, but they're like, I'm buying this house because the taxes are lower than that.
I
No,
tell
they're
them
all-
it doesn't matter. It's the
doesn't
same
matter.
price.
It's all going to equal out.
Yeah, in the end, it's all the same.
For 4 months, it's fool's gold.
Right.
That's it.
So if you really want to buy a home or you really want to sell a home, you really need to get with somebody that's educated and knows what's going on. So either give myself or Cliff a call. And if you can't remember Cliff's number, you can always look up Making Money with Laura Sanders, and I can connect you to. Again, Laura Sanders, Remax Direct, 954-650-0827. And like always, make it a great night.